So first of all, we'll talk about saving, and it's important to pay yourself first and prepare yourself for the future. And checking versus savings and what's the difference. Checking is for your daily spending, savings is for your future. Plan for the unexpected. Create a plan to accomplish your goals. This is different for everyone. It is based on your lifestyle and your income. The next topic is spending. When thinking of your monthly spending, it is so crucial to determine what your needs and what your wants are. The other piece is not simply thinking about it, but also putting it to paper or in an app to stick to your monthly budget. Also, when thinking through spending, are you utilizing your debit card or your credit card? The difference is for utilizing your debit card, you're utilizing your own money in your checking account. If you're utilizing a credit card, you're utilizing their money. It is important to think through if you utilize a credit card, how will you pay back and how quickly? The reason being is if you are utilizing a credit card, you're paying interest, in a lot of cases, a high interest on those credit cards.
Thank you, Katie, for talking through the saving and spending portion. And just keep in mind, again, as she touched on with the credit card piece, it's super important to understand the terms of that credit card, which kind of leads us into our next portion, which is about borrowing. And again, we're just kind of starting the first step in the borrowing piece. But really, the first thing is when you are getting ready or thinking about borrowing, it's important to figure out where is your credit score and what is a credit score. So credit scores can range anywhere between 300 and 850. There are different reporting bureaus that will report your credit score. At Bremer, we utilize Equifax, which is one of the major credit bureaus, but other banks may use other different areas or different reports to be able to pull your credit. It's important to know when you're trying to figure out your credit score, what are those factors that are determining where your credit score may end up. Well, some of that has to do with if you've had credit in the past. So for example, have you had a credit card? Have you had a car loan? Have you, had a home mortgage? If you haven't had those things or you haven't had credit in the past, your credit score will start out at a 0 only because you just haven't had the history of having credit. And so that's why it is important to start building credit early on so that it prepares you for when you do need to make a major purchase, whether that's a vehicle or whether that's your home, so that you're set with a credit score. One of the things that we talk a lot about with clients is how do I improve my credit score? And so ways you can do that is if you had not so great credit previously, is to make sure that you take care of or extinguish any of those debts that maybe you hadn't paid. Maybe there's some collections that you need to make right. Mm-hmm. Making sure those are taken care of. And then to start building that credit up, sometimes you can do what's called a secured credit card, where you actually utilize your own money and you put that money aside and you utilize that credit card. That will help you start building credit in as little as 6 months. When can I start building credit? You can start building credit at 18 years old. So you have the ability starting at 18 to go into a contractual agreement, basically to start building credit. So one of the questions we get a lot is, well, I've had a checking account for 4 or 5 years. Does that build my credit? That does not build your credit. The other piece is I've been on my dad's credit card as a signer. That also doesn't build credit. So you yourself personally have to be on the hook for that credit to build and your credit score to increase. Different things to consider when you are at that point where your credit has been built and you're ready to, okay, I'm going to engage in this contract to purchase this vehicle, is figuring out for yourself, what are those monthly payments going to be? And the reason we want to do that, and Katie will talk more about that, is really for the budgeting purpose to determine, right, what it is you can afford. And so knowing that piece. The term of the loan, which a term means how long do you have to pay back that loan. So knowing what that term is. And then one of probably the most important things is, what is the interest you're going to be paying? So you're going to have interest on loans. That's just the reality, because you're borrowing these funds from someone. And so you're going to have to pay back what your initial loan amount is, plus interest on top of that. So figuring all of that out is very important when you're starting to determine, should I take this loan or should I take that loan? Or maybe it's not the right timing based on the term, the interest rate, and what that monthly payment is going to be. What are some things that we look for as lenders, and really this is globally, is we look at, do you have the capacity to pay this loan back? Meaning, we refer to it as debt to income ratio. So do you have the ability to pay that back based on what your income is currently, what your outstanding debts are, and then adding this debt in? We do that because we want to make sure that you have the ability to pay this back and you're not financially strapped doing so. The other thing is obviously looking at the credit score and knowing, okay, this credit is good. And again, what do we consider good? In most of our loans, it's right around the 640. You need to have a credit score of at least 640. So we look at the credit, your capacity to pay it back. We look at also the length of credit history, like how long have you had credit? All of those things equate into what that credit score ends up being. And then if it is a loan that's secured, for example, by a vehicle, making sure that that vehicle has enough value to support the amount of the loan. There is a lot to think about when you're thinking about loans. Know that if you have questions, you can certainly reach out to myself, or you can reach out to Katie regarding any of those lending questions that you may have. Even if you're at a point where you're just starting to think about the lending and what are some steps you can take. It's very specific to you. And again, what your income is, what your capacity is to pay that back. In addition, with borrowing, there's typically two types of loans. So there's an installment loan, which means it's a fixed rate. You have the same monthly payment every single month. Those are typically vehicle loans, they're home mortgages, or they're unsecured term loans. The other type of loan is called a line of credit. So line of credit is something that's revolving. So like a credit card or a line of credit, your payment is going to be interest only, and that can change based on the amount of money you have borrowed. The biggest difference between the two is that a secured loan, which is typically an installment loan, it has collateral, so a vehicle or your home. An unsecured, or typically a revolving, is usually your credit cards or your line of credits, and you don't have any collateral attached to that. Typically with those revolving loans, or Katie touched on credit cards, those are higher interest rates because the liability for us as a bank is a little bit higher because we don't have the collateral attached to it. The next thing we are going to actually touch on, Katie is going to start talking about protection on the accounts.
Yes, right now we are seeing a very big increase in fraud. And fraud is in any form. It can be check card fraud, check fraud, ACH withdrawal fraud. And how to protect yourself. Identity theft is reducing the risk when possible. Reduce your risk when possible. Guard your information closely. If something doesn't feel right, don't put your information into that website. Don't respond to every request. Protect your mail personal information. Review accounts regularly. Your checking account, looking at your online statements, looking at your balances, looking at your transactions. If something doesn't look right, get in a hold of the bank right away. Stay informed. Educate yourself. Like I said, if something doesn't look right, call your bank directly. Do not call the number on the screen. Please call your bank. And we can kind of go through and see what's going on. If you have given away your information, then we can go through different steps to close the account and start a new one, and and also cleaning out your computer. And also, it's also a good idea every year to pull your credit report. And you can pull it once a year at annualcreditreport.com for free. And the neat thing about this is it goes through the 3 different credit agencies, so you can see if there's anything you need to dispute or if there's anything that does not look right on it. Fraud, like I said, is one of our biggest challenges right now in the banking world, and we're seeing it all ages, not just our older generation. We're seeing it our younger generation, our middle age. It is hitting everybody, and it's hitting it in different ways. So just to protect yourself and your information.
Agreed. I think Katie brought out a good point of don't call the number that you see on the screen or in the email that you receive. Call your local bank. We're finding out in this fraud situation that they are even spoofing numbers. So the number may look like Bremer Bank, but it really isn't Bremer Bank. And so the importance of hanging up that phone and calling the local branch based on the number that you know. We can't speak to other banks, but we've seen just such a huge increase. And we are about protecting our clients, and we are willing to go that extra mile. As Katie also said, if it doesn't look right, don't do it.
It's too good to be true.
It probably is.
Exactly.
Yeah, so just keep that in mind as well. We just want to kind of close out by just talking about accounts, specifically what we can offer at Bremer, but also we just kind of want to close out too by, again, reiterating the fact that if you have questions, you can certainly feel free to reach out to Katie or myself. We do have different types of accounts. So the 2 main accounts we're going to talk about are checking and savings accounts. Again, as Katie stated earlier, checking is for your daily purchases, your groceries, your gas, your utilities, those types of things. Whereas your savings is you're putting money away, and you really are trying to save for those future expenses that may arise. So how do you open an account? At Bremer, you would just come into one of the local branches. We prefer to have an appointment just so that we can have dedicated time with you to understand what your financial goals are and what you're really trying to accomplish and what's important for you to have at your local bank. So we prefer, again, you come into the local branch. What will you need? So we need to see a photo ID. So that's a driver's license, a passport, a state ID. Those are all things that can be utilized. You'll need to know your social security number, your birth date, and then we need a current address and a phone number to be able to open the account. In addition, we will need some type of opening deposit, so some form of cash or check to be able to get that account open. The biggest thing is we do like to spend the time and take the time with you. Also, we know that everybody's on a little bit of a tight schedule, so we'll be very cognizant of that as well. But we always want to just reiterate to our clients that we are there for them. We are available if something does come up. The one question we get is, what happens if I overdraw my account? What do I do? Well, first of all, I will say the more you can communicate with whomever your banker is, if it's Katie or myself, the better it's going to be. Just staying in communication. But if you overdraw your account, if we pay that item for you, even though you don't have enough money in your account, you're gonna need to be able to pay for that item, plus there is a charge, an overdraft charge for that item. There are some occasions where we return the item. You don't receive a charge, but you do need to make that item good with whomever that person is that you either typically wrote the check to. We will not let you overdraw your account if you're utilizing a debit card. That's just a rule that we have, and I think most banking institutions do. So you need to have those funds in there before you're making purchases. Again, it's been a pleasure talking with you all today, and if questions do come up, again, reach out to Katie or myself. We're happy to help. But just thank you for your attention.
Yes, thank you so much.